Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another special episode of Equity Mates, where we are searching for Australia's next top trader. We're a podcast that breaks down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined on this very special occasion by my equity buddy, Ren. How are you going, bro?
I am so excited for this, Bryce. The day is finally here. We have pumped the ads. We have been trying to get people excited, and we have got a great group, a much bigger group than we thought. So that's always a nice little win. And we are ready to do Australia's next top trader.
Mate, couldn't have said that better. Today is the day that we kick off. It's been an exciting build-up. The vibe is strong. Everyone's ready to start trading. Content and lessons are ready to go. Website's up and running. We're pumped. New York is waiting for, one, the person that is the best performer and trader over the next 6 weeks, and two, the person that also refers the most people into the competition using their referral code. And a reminder that every person you refer, you will get $5 into your account, as will your friend who you refer in. So use your code through the Stake app to refer your mates in. And Ren, awesome. As we said, tonight we kick off. This is just going to be a short episode. We've got Matt, our professional expert trader from Stake. He's going to be talking through some of his hot tips for the next coming weeks, what is on his watch list. Both Ren and I have a small correction to make with some past information that we've given, and then we're just going to let you guys get stuck into it. So, Ren, I just want to quickly address one thing, and we have had an overwhelming response to this competition, much bigger than we had first anticipated, and a lot of people are asking why we have set it as a university trading competition. Firstly, anyone can play. The prize, though, is limited to a university student. The reason being was that we absolutely did not anticipate this to be anywhere near as big as it has become. It was just going to be something small that we wanted to get off the ground with the hope of making it something special later on down the track. But, you know, it's been awesome, the response that we've had. We've aligned with universities to help make this happen. It's really in line with our ethos, getting millennials invested into the market. So as we said, anyone can play, and the response has been awesome. So it's encouraged us to make this even bigger and better the next time that we do it. So if you feel left out, by all means, content is going to be available to anyone, and you can also play along as well. You will have nothing to lose.
Yeah, I think that's well said, mate. I think we're stoked that people are upset that they can't play, because it means they care enough about the podcast and what we're doing. So, but look, you know, we hear you guys, and we're sorry, but play along. You still can access all the content, so you're not missing out on anything. But yeah, look, we as you said, we aligned with unis to get this competition off the ground. So we're gonna be giving the prize to our best uni student trader.
Absolutely.
Yeah. So, corrections. Look, we are not experts by any means, and I thought it was worth me addressing something that I said on our recent Ask Us Anything.
How honourable.
Well, I mean, mate, we get it wrong more than we get it right. So if we were just doing if we're doing every correction, we'd probably have to do a separate episode every week. But no, this one I thought was worth. I thought it was pretty funny, actually. So the first question I got asked on Ask Us Anything was, would I choose A2 Milk or Bellamy's? And I sort of said, given their half-year reports, I would choose A2. It seems that they've got a lot of momentum still, and Bellamy's is in a bit of trouble, or it's sort of going backwards. In the week after I said that, Bellamy's share price has jumped up 30%. So I hope you weren't listening to me. Well, I mean, you know, I hope you listened, but I hope you weren't trading on what I said, because that's a pretty big example of me being completely wrong. And Bellamy's really stuck it to me literally the week after I said it. So there you go. Don't take trading advice from a podcast.
Nice one, Ren. An honourable correction there. My one relates to this episode where we were discussing what's hot and what's not in the markets with Matt. We mentioned the opening times for the US market in Australia were 1:30 to 8 a.m. However, that needs to be corrected. The states are going to be adjusting their clocks for daylight saving just the day that we start trading. So the new opening times in Australian Eastern Standard Time are going to be 12:30 until 7. So that's when the markets will be open, as in 12:30 a.m. That's just past midnight. 12:30 a.m. to 7 a.m. is when the US markets will be open. You can obviously place trades anytime you want, but they won't be executed until the market opens at 12:30. So that's my correction and something to consider.
Yeah, nice one. I think that's important that people understand that doesn't mean you have to be up there. As you said, you can put an order in at any time of day and it will just sit there, and then when the market opens, they'll buy or sell your shares.
And that brings me to my last point, Ren, is that you do not have to feel pressured by any means to put a trade in tonight. Take your time this week to get comfortable with things, listen to some of the content, think about what you might buy. But having said that, it is a 6-week competition. Time is limited, so certainly make the most of it. Do what feels comfortable. Don't feel pressured to make any sort of trades tonight just because the competition kicks off tonight. Although the one that you buy tonight could be the one that gets you to New York. A few other housekeeping things. If you want to contact us and ask one of the many millions of questions that I'm sure you will have, contact@equitymates.com is our email. We will be active on that throughout the competition. You can also hit us up on Instagram, Facebook, or Twitter. We're across all of those. Certainly follow us on Instagram and Facebook. We'll be releasing some exclusive content there that won't be coming through the podcast or our emails to help you through the competition. And we'll be getting in touch with some of the players as well to understand how they're trading and what their lessons are. We have access to Stake and a few other experts. So if you have any questions for them, head to the Stake website and hit them up, or you can come through us and we will be doing some Ask Us Anything Q&As throughout the competition with some of the experts to answer all of your questions that would be beneficial to everyone. So from me, Ren, I think best of luck to everyone. It's going to be an awesome experience, huge prize on the line, but this is more about dipping your toe into the water, making that first step, taking the leap. It's a fantastic opportunity to do that. Ren and I will be playing along. You will probably do better than we do. So I look forward to seeing how we go. But best of luck to everyone. And you're just about to go past the hardest part, which is starting.
100%. Well said, mate. I think if we can get some people starting to invest through this competition, we've done our job. Just one other thing, and then we'll go to Matt. If you're not participating in the competition and you're thinking that, the next few weeks of content aren't going to be for you, we've definitely kept you in mind when we created this content, especially the podcast. We hate spam as a podcast. That's our official position on spam, and we don't want to spam your podcast feed with episodes that aren't relevant to you. So all the content that you will be getting, because there will be a little bit of it over the next couple of weeks, it is intended for everyone. While we'll talk about the competition, the investing lessons, the trading tips, all of that will be applicable to people not participating in the competition as well. So definitely stick around, definitely stay tuned, and if you're not participating in the journey, follow along and hopefully learn.
Nice, Ren. Well, let's do it. Okay, so we're joined once again by the infamous Matt Leibowitz.
Why infamous, Bryce?
I don't know.
Sounded right.
You've been on this show many times. You're almost becoming part of Equity Mates now.
Yeah.
For those who are unaware, you're our trading expert, founder and CEO of Stake.
Good luck to everyone out there with me as the expert.
The platform that we'll be running the competition through. And speaking of competition, today is the first day of competition. Markets open tonight, 1:30 a.m. Tuesday morning, but for those going to bed tonight, Australian Eastern.
Daylight time, right?
Yes.
Yeah, and so for those in Western Australia, you could probably still be awake.
So if you want to take it seriously, take a sickie tomorrow.
Or wake up really early.
True.
Yeah,
true.
Trade at the end of the day. Yeah, so if you're Australian Eastern Daylight time, it's 1:30 a.m. to 8 a.m.
Yeah.
Obviously, different times around Australia, it'll be different. But you can place an order at any time, whether you're buying or selling, and that order will be queued up and ready to go when the market's open, or if the market's open, it goes directly straight through. So,
and we go through detail of that in one of our episodes on types of orders. So the reason we have you here today, Matt, is you're going to be our expert for the competition. We're going to be checking in with you throughout the comp to get your perspective and view on the market, get some hot tips from you in terms of what stocks you might be looking at. By all means, this is not a buy, hold, or sell recommendation for anyone. This is merely to give some people some ideas, some inspiration, a bit of an insight into what you yourself are looking at and what's out there at the moment. So let's just first, recap on, why we're doing the comp though, because we both sort of share the same idea in terms of this not being necessarily for people that know about investing. By all means, it's going to be a great opportunity if they do. You can hone their skills, but also this is a great opportunity for people to dip their toe into the water for the first time. Do you have any comment on that?
Yeah, absolutely. 6 weeks is a very short part of your investing journey. This is the beginning for those that have never invested before, and for those that are more experienced, that have been in the markets for years or months, or really just starting to find their feet. Being in the share market, it's a great way, as you mentioned, to hone your skills and just get better. So there's something for everyone. As you mentioned, stakes really just about giving people access to the share market, the world's biggest share market, the US, and I think it's great that people can either, if they're getting invested for the first time, sort of understand or know the companies they're getting invested in. For those on the other side of the curve that are a little bit more experienced, to be able to explore the full breadth of the US market, which is just enormous. The range of the sectors that they have, the range of companies, the size of the companies, and you'll really get to explore your own ability as well, and your research, how wide it goes. But yeah, if you're a first-time investor, it'll be very different to if you're a seasoned pro, but that doesn't really change too much. At the end of the day, people are trying to win the cash, and they're trying to win the prize, the big fish, to win their trips to New York. But I really think the real prize is just going to be getting better by the end of the 6 weeks.
Absolutely. Getting over the biggest barrier, which is always starting, and this is one of the best ways I think you can do it. Let's get stuck into it, I guess, Matt. You're watching the markets quite closely every night, doing your own trading. So from a general market perspective, where do you sort of see things sitting at the moment?
It's actually really interesting. I don't know, for those that have been following, the market really turned pretty scary actually at some point the last quarter of 2018. And then the last 2 months, it's literally just been on a tear all the way back up. I get a little bit jittery when that happens, but I've been proved to be wrong for the last sort of 4 to 5 weeks while it's just gone back up. So people that bought the dip did really well, but the money in investing and trading is actually made on the sell side. A lot of people think that buying a share is easy. It's selling's hard. It's so easy to get attached to buying a share. So yeah, right now I'm just the way to describe it is lightning positions, just as it's rallied back up so aggressively. Look, it could keep going, and I generally would rather be long than short right now, purely because the market is strong. Well, it appears strong, but I've borne the scars of November and December, so I just think it's a little bit tentative. I don't think there's a real clear direction where it's going next.
But since sort of Christmas, it's been on an upward trend.
Yeah, an aggressive one too. So the market really dipped. It would have been over 20% really from its high of 2018, and it's just really just nearly like a dead cat bounce is the way it's sort of used in market terms. You don't need to imagine that. I think I've spoken about this before. Yeah, but what happened was the market really dipped. Tech sort of led the way in terms of the fall, and it's also really gone back up. And there's a lot of momentum. Even here in Australia, the markets are really strong, and there's a lot of nearly euphoria again, which is always a worrying sign. But a lot of shares, we spoke about before the podcast, of Facebook shares that dropped 25% if you invested pretty much at the beginning of the year, which is, they also fell 30% last year. So these things happen. So I can't give you a very quick summary. I'm just cautious. But I'm always cautious.
And so then in terms of if I'm sitting there thinking about, the first stock to buy, you mentioned tech and Facebook leading the way. Are there any other industries that are sort of booming right now that from your point of view?
Yeah, well, the breadth of the US is really big. It's got a really big range of stocks. Cannabis stocks we've spoken about at stake. I've never seen anything like this before, really, and just in terms of the euphoria and every week there's a new listing in weed stocks, a new request for new stocks on stake. Can you list this weed stock? Canadian stocks are now listing on the NYSE. it's matured enough to a point that space and not everything is moving together. I mean, I look at the whole Bitcoin and all the other coins, they sort of moved in a correlated fashion, and correlated means they all move together. And that isn't happening with the weed stocks or the pot stocks. So that tells me that there's actually some maturity in that market. I'm watching one stock, which is Cronos.
Okay.
I think it's one of the biggest ones out there, but it is literally just still strong as an ox. And I don't know if it's a winner-take-all market. I really don't think it is, but it is one stock I'm keeping my eye on.
Okay, so if we want to find that on stake, we just go to your shop and type in...
It's either its code, which is CRON,
Yep.
or type in its name, which is CRONOS.
Cronos Group. So that's in your cannabis sort of watch list?
It's one of the leading cannabis stocks.
Okay.
But if you want other ones, there's other ones that are also in that space. CanTrust has listed it was previously on the Toronto Stock Exchange.
Yep.
And now it's dual listed, so it's listed on both Toronto and the US, and it does that because US access to capital is a lot bigger from the US market. So that's one stock I'm just keeping an eye on. Hasn't really done enough for me to really jump in aggressively.
Yep.
But you can find any weed stock or any pot stock on stake just by using a search term. You can type marijuana, you can type weed, you can type pot. The same stocks will turn up.
Yeah.
I think we've even got a dedicated search. So if you're on the app,
Yep.
or the web,
I want to trade weed stocks.
do you, Bryce?
So I'll click on that. So we've got. So what are your thoughts on Tilray? I remember when we were looking at weed last year. That was sort of one that really took off quickly and early.
Yeah, I mean, going back to absolute basics. What you really want to look for in a share is strength. And you want to look for, it nearly sounds weird, especially in a competition like this, you want to look for short-term strength.
Yeah.
It's like a thing in motion, it generally stays in that pattern. You may have some ups and downs, but it'll generally move in that direction. Tilray had a real big run in the middle of 2018. I think it hit $300. You may not see that on the graph, but one day it hit $300 and closed back down like $50 lower that same day. So I sort of parked that one to the side and wait till it's showing strength again. Whereas Cronos and I think Industrial Innovative Properties, which is a leasing company, but it leases it to marijuana producers in Canada, and I think even in America, has also been incredibly strong. So, it doesn't matter what you're trading. You could be trading, as I said, coins. You could be trading Aussie equities. You could be trading weed stocks. The same things are you want to buy. At least the way I trade is you want to buy strength.
Yeah.
Everyone thinks it's buy low, sell high. It's actually buy high, sell high.
Easier said than done.
Yeah, a lot easier said than done, but it's really hard to train yourself, this looks expensive.
Yeah.
And I've been told many a time by my wife that expensive is cheap, right? So sometimes when you buy something expensive, it'll appear cheap later.
Nice.
And the same applies to stocks. So you want to buy stocks that look like on a graph, that are going from bottom left to top right.
Well, a perfect example of that is the one you just mentioned, Innovative Industrial Properties. IIPR is their ticker. So you want to type that into stake and it'll come up with a graph of what they've looked like over the last year, and it's going bottom left to top right. So perfect example.
You don't know what's going to happen next. It's all, you're just adjusting for risk, really. And you're saying that in the balance of probabilities, if I trade this stock, I believe it'll go up and I'll be able to sell it at a higher price. And that's all you're trying to do. No one knows. No one's got a crystal ball, and it's all about managing your risks. Trading is actually, as I said, it's not about the buy. It's really about the sell, but this is just little tools that help you make a better buy.
So we've got two weed stocks, Cronos and IIPR. We're a bit sketchy on the market overall, but what else is sort of hot from your perspective?
Yeah, the gas was hot. There's a few...
no pun intended.
I didn't even think about that. You're much more awake than me at these hours. Must be my kids. Yeah, gas has been hot. It was early on. It's really died down pretty quickly. So I've sort of taken my eye off it a little bit. But a couple of stocks I just picked up on my watch, which is Enphase Energy, ENPH. And there are 3,400 odd stocks on stake. So, naming 4 or 5 are not going to be the ones that are, we're definitely not that good. We wouldn't be in this game. So Enphase is just one. It's been a really strong stock since for the last year. I think it's something 114% or something for the year. But as I said, it looks like it's got the strength behind it. So do you want to back winners or do you want to back losers? I'd rather back a winner. So that's just one that came up. And then there was I picked up an ETF, a commodity ETF, just on this was having a look. I think its code is PALL. It's actually Palladian. A lot of people think that they have to be able to trade a commodity, you have to go buy the physical, or you have to go play the futures market. ETF providers, they go do that for you, and they just partition it off in units, and that gets listed on the exchange. So you could trade gold, silver, wheat, gas, as we spoke about. Palladium's one of those ones that's really just been moving forward. And the way commodities work is that there's obviously a structural thing going on in that space. So it's these things trend for a while. So it could be one of those things that keeps going.
And that's an important point in terms of finding sort of inspiration. If you read somewhere that gold might be on a bit of a run, then there's certainly ways to access it through ETFs like that. So don't feel like you're limited to just buying singular stocks.
Yeah. And really, as you'll find out along your journey, if you've been in the market for a while, that it's really being consistent is the key, and it doesn't matter what you're trading. Obviously we're a US share trading platform. We obviously believe that the US is where the world trades, or sort of is, just if you look at it empirically. But trading is trading, right? It's just a language, and you can apply it in Australia, you can apply it in India. We just like to do it where the markets are bigger and the liquidity is there and the costs are lower. But, you could trade Palladium, you can go trade Facebook, or you can go trade a weed stock.
Yeah.
And if you're consistent and you learn the right disciplines, you'll make it work. You get in what you put out, really.
So we've got an ETF. Anything else on the watch list that's sort of tickling your fancy, or to stay away from? You sort of mentioned gases was hot, not so much now.
Yeah, I generally stay away from a sector. Look, it's in a 6-week competition. If you're really trying to win that trip to New York, you're obviously going to play with fire.
Yes.
No pun intended again. But I wouldn't be playing with gas. I just don't think it's got anything left in it. I think if things start to if they get shaky again, like we saw in December, there's some great ETFs that could really ramp you to the top, but they're definitely not for the first-time investor.
Yes.
They are leveraged, so they're sometimes they're 3-to-1 leveraged, and that's the most that you'll get in an ETF.
Do you want to explain what that means?
Yeah, so leverage means for every dollar you put down, you get 3 times the exposure in a positive or negative way. You can't lose more than you put in, unlike other derivative products. This is just an ETF that when let's say it's the short NASDAQ ETF, right? So I'll make it, and it's 1 times. So if the NASDAQ index goes up 1%, your ETF will go down 1%. And now there are triple leveraged ETFs that are both positive and negative. So if you were 3 times leverage to the positive, so the NASDAQ, that would be the TQQQ. For every time the NASDAQ went up 1% on that day, your TQQQ share would go up 3 times. And there's an inverse on that as well, called the SQQQ, which goes up by 3% every time the NASDAQ goes down by 1%. Or, if it's 0.5%, it's 1.5. That sort of, as a ratio of 3-to-1 to the positive or negative. So, if you really want some serious exposure, or you really feel like backing yourself, those are instruments you can use to reflect what you believe is going to happen in the market.
Absolutely.
But as I said, because they're highly volatile, they're far too complex for just first-time investors, and I really don't suggest they delve into that straight away.
Hey, you got to understand what you're doing.
Yeah, and these instruments they're made for short-term, highly volatile, either a hedge position or just really speculative play. So the competition may be, for someone who's experienced and who's wanted to access these type of products, it may be useful for them, but it's not for your first trade.
So we had SQQQ, which was the short NASDAQ.
3 times.
3 times.
Leverage. Yeah.
Dangerous.
It's complex. Yeah,
and then we had TQQQ, which was the long NASDAQ 3 times as well. So for those more advanced traders out there looking to have a bit of a real red hot crack at getting to New York, they might be a couple of stocks worth looking at.
When the market, given what we saw in December, the scars, they're like mental scars. The people have the GFC still plays on people's minds.
Absolutely.
A little bit, like what's going to happen. Everyone's got a memory, the market's got a memory. So if we see the market start to fall again, I think we'll see pretty aggressive falls. So you'll see people probably jump into the inverse leveraged ETFs. Maybe, depending on their risk appetite. And there's also volatility ETFs. So the volatility really became sexy during the GFC. As an asset class. Previously it wasn't very accessible. It was traded via trading many options, and ETF issuers actually went and bought that options or the VIX future and packaged it into an ETF so people can actually trade volatility now.
Which sounds confusing.
But it actually isn't. It's like anything. It goes up, it goes down.
Yes.
Do you want to buy it here and sell it here? It's no different.
And you're very good at it.
But
I was an options trader for 10 years. So
you know what you're doing.
Yeah, I still don't know what I'm doing.
It'd be good, I think, throughout the comp if you see sort of changes in that particular stock or ETF, whatever it is, the volatility, we should certainly discuss it, because I think it's a really important thing to understand for more the advanced investor.
Yeah, and people hear about the VIX and they hear the fear index, and definitely you may need those after staying up late. But these are you're basically trading a commodity via a share. Yeah. So it gives you great exposure if you believe that that's what's going to happen, or you want some exposure to those asset classes, and it's really easy through an ETF. But these products are complex, so that's also worth keeping in mind.
We've spoken about weed, sort of the industry of choice at the moment.
It is.
Gas has sort of had its time, but certainly still some opportunity.
Yeah.
The market overall a bit sketchy, unsure what's going to be happening.
Well, it's strong,
but you're a bit.
I'm always nervous. I'm always worried about things going south.
We spoke about SQQQ, TQQQ, both leveraged products. Buyer beware, certainly with those for the advanced investors. And I think just the general message is that there's so much stuff on stake at the moment that if you can think of any sort of theme or keyword, you can search by that and dip your toe in that way. Totally. So I would recommend having a look at the stocks that we've just spoken about as a way of getting some inspiration. But as we said at the start, this is not a buy, hold or sell recommendation.
No, definitely not.
Your own research.
I mean, just to finish that off, the key thing is to understand risk. And this is what we're trying to get people to understand by this competition is you have to plan a trade. You need to say, I'm buying at this. If things go wrong, there's nothing wrong with being wrong. Investing is about making money. It's not about being right. You can be right 8 times and the 2 times out of 10, and the 2 times you're wrong can actually wipe your portfolio out. Whereas if you're actually investing, you can be wrong 8 times and the 2 times you've actually run that profit so far that you can be highly profitable being right 20% of the time. So my key message is it's not about being right. It's about understanding what risk is, cutting your losses early. There's no shame in being wrong. This game is not about being right or wrong, and I'll keep saying that to people. It's really about understanding how the market works, how you behave in the market, how do you feel when you place a trade, and just learn, prepare, do your work, and you'll be fine.
Cutting losses is critical in a 6-week competition.
It's critical all the time.
Yeah, true. But I think certainly something I learned. So I think there we have it. You dishing out some hot tips. We'll check back in with you as the comp goes on, see how your perspective changes, and we'll be playing along as well. So thanks for joining us, Matt. If anyone has any questions, you can hit us up at contact@equitymates.com, and we will also give you access to Matt as well. And you have some books that you want to talk about.
Oh, yeah. So you saw my little note. Yeah, so we were just talking a little bit about inspiration. I think it's a great time for people to have a book as well. I mean, there are so many great people that have been, markets have been around for, centuries. And people have written some great stuff, and go to the library, go to Amazon, jump on Book Depository, whatever you do to buy a book, and either grab it in hard copy or on Kindle, and go read a trading book. It'll just inspire you. We can send a list out. Yeah. We can even do.
We'll put it in the show notes.
Yeah, exactly, and just give people. I think it'll motivate you to want to be better, and you'll actually hear it from people that are far more insightful than me. Absolutely. And you, sorry, faggots here, that have been there, done that, and they've been in exactly the same position as the listeners.
And I just want to finish with, don't necessarily feel like that you need to place a trade tonight. Don't freak out about it. It is 6 weeks. We do harp on about it being a short period of time, but take your time this week, I think, just to get comfortable with it. But by all means, certainly do something by the end of this week, because then you'll only be down 5 weeks. Best of luck to everyone. We'll be here. We'll be releasing content. We've let you know what the schedule's going to be. So we'll leave it at that and catch up with Matt next week.
Cheers.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.